Alright everyone, welcome back, and in this video I'm going to be going over some Instagram Reels, trading related Reels, and we're going to be looking at the comments and see what people are saying. Because let's be honest, the comment section of pretty much any video on the internet is pretty much diabolical these days. I mean, there's no other way of saying it. Especially when it comes to things like trading, because everyone is a so-called expert, right? And yeah, I mean, you have the Dunning-Kruger effect just on full view. And if you don't know what the Dunning-Kruger effect is, it's basically, long story short, if you're not very educated on a subject or not very proficient in a subject, you overestimate your abilities and your knowledge, and vice versa. If you are actually a professional, an expert in a certain subject matter, you underestimate your abilities. And you really see that come out and pop in the trading space. So let's get it cracking with the first Instagram Reel. So the first clip here, already we can see on the title, he risked $1 billion to make a $18 million profit with it. Title's a bit naff, but anyway, let's go on. Let's carry on. Let's actually watch it.
All salespeople, listen up. I'm a buyer of pounds.
What the fuck are you doing?
Pierpont is a buyer of cable. Any salesperson worth $2 gets me pounds. Get on the phones.
What are you doing?
Hey, Rush, what is he doing?
He's taken over my book. He's running an extra 300 million on it. I don't know what to do. He forced me.
What's your bid on 150 million, Tudor?
Fuck it, I'm 80 bid.
Yeah, done. I want to weigh 80.
Will you try outstanding for you? I want to see your bid.
Stop raiding now. Fuck that, yeah, speak. Eric, let me do my job.
Avatar wants your bid for 200.
30 bid on 9.
Yours, 200 on a 109.30.
How big is this position now?
Close to a full yard.
What? £1 billion, I'm calling security.
Mine!
Receipt, step away from your terminal.
Mine. Look at the tape. Look at the tape. Chancellor reveals plans to reverse almost all provisions made in the budget, including top rate tax. This is a full-scale rollback. Repeat, they've set fire to their plans. Fuck. Sterling is rallying here. It is gapping up. He's gapping up, buddy!
Oh my God! Talk about an emergency rate hike. The MPC are raising rates by 200 basis points.
You're fucking kidding me.
The biggest rise in UK interest rates in 27 years.
Sterling back through our level now.
We're in profit. I need to offer the position ASAP. Could someone get me out of this long, please? Any salesperson? I'm a seller up here. Double sales credits.
I have a buyer. Al Mirage in size.
Yeah, any size like that.
Okay, wait. What's your offer on a yard sterling?
70.
70. Mine. Done at 113.70.
Yes!
We've made 18 million across our books. You're not even a good trader. You're just lucky.
Yeah? Tell me, what's the difference?
Alright, so great little reel there, and obviously it's from some kind of TV show. I think in the description it says in HBO industry, one trader does the unthinkable. So some HBO show. Anyway, they did actually a very good job at kind of copying, you know, the trading floor environment. And now look, any trader who's actually a trader will kind of understand what is going on. Even if they're not in the institutional kind of level, they can kind of figure out what is actually happening in this little clip. But let's go to the comments and let's see what people say. So here we have a comment with 36,000, basically 37,000 likes. And he says, 1 billion to make only 18 million doesn't seem like a smart choice to me. I don't know what are these people talking about? Alright, look. Fair play, the title says he risked 1 billion, but he didn't risk 1 billion. 1 billion is his position size. No one's risking $1 billion. Are they insane? And, I mean, I don't know. Look, people need to figure out, I mean, this is just a pure case of someone who doesn't understand trading or doesn't understand a single thing that is actually going on in this little clip, right? So what actually was happening here? So basically, he anticipated a big move, right? Based on news. And he wanted to buy a full yard, so $1 billion position, okay? Now, when you enter a standard lot, one standard lot on pound US dollar, how big is your position size? It's actually £100,000, right? £100,000 is your risk then in that, but you're not risking £100,000, right? Your risk is still whatever your exit is going to be. Now, granted, with $1 billion, it's not as easy to exit as just clicking a button, right? Because there just isn't enough liquidity to exit, right? So, you know, and that's why at the end, when he wants to sell his position again, all right, and get out the trade, he's literally got his salespeople on the phone to another big entity, right? And I can't remember who it was. I think they did mention the name. And they offered, you know, to buy the whole $1 billion position. They negotiated the price at, I think it was 70, and boom, done, right? They're out. So, but essentially it's the same situation, right, as a normal retail platform, right? You're, you know, in a retail platform, you're using a broker to kind of connect you with a buyer or a seller on the other side, and they take, you know, a cut, a commission, a spread, whatever. Yeah, he's not risking 1 billion to make 18 million. In fact, that's actually what his trade is actually phenomenal. Okay, so let's actually calculate how good of a trade this was. So his lot size equivalent at 1 billion, because if one standard lot is 100,000, right? 1 billion would be 10,000 lots, okay? And he made 18 million. Now, one standard lot, one pip of movement is $10, okay? So if he made 18 million, if you were to do the same, basically, so 18 divided by 10,000, 18 million, sorry, would be $1,800. So his equivalent, so yeah, would be $1,800. So his trade is like making $1,800 on a single lot size in a matter of minutes. So you can understand that is a phenomenal frickin' trade, right? That is a great trade. Imagine making $1,800 in a few minutes with one standard lot. Pretty damn decent. And if you want to work out how many pips that is, we can divide that by 10. That's 180 pips. 180 pips in a matter of minutes. Great trade, right? But what are all these comments saying? Oh, it's rubbish. So let's look at the replies to that. So some people are saying, it's misleading. The pound will never go to zero. You lose points, never the entire value. Yes, that is true as well. So this person kind of got it. It is misleading. He's not risking the whole 1 billion, obviously. Because, again, it will never go to zero, right? Well, I mean, it could do, but highly unlikely, right? It's a pretty safe bet. But again, he's only risking whatever he's willing to lose. Right? No different to when you trade, right? You only risk what you're willing to lose. If you put your stop or have an area where you say, right, I'm getting out here, I'm going to sell my position and get out, that's your risk. It doesn't actually matter how big your position size is, right? Your risk is always going to remain wherever your exit is. That's trading, right? 18 million commission ain't that bad, buddy. What's he talking about commission? I don't know. Making 18 million in a couple of minutes, clap, clap. And then the guy replies, wow, what an intelligent person. The point is that at least from the title, he risked 100% to make 1.8%. It is not at all a good management of neither risk nor money. Then that you get excited because you think that 18 million is a lot, it is not my problem. I'm sorry, but this dude does not know anything about trading, right? This guy just simply has no clue what he's talking about. Again, Dunning-Kruger right there. We're going to slap the Dunning-Kruger. Maybe I should make a little graphic of a Dunning-Kruger graphic. Every time someone comes out with something stupid like that, we'll slap that onto their picture or something. I don't know. But no, this guy knows nothing what he's talking about. I mean, he's just chatting out of his ass right now. So, here we go. And now he replies, bro, I live off trading. I've been doing it for 5 years. No, this is not FX. This is a fucking movie. Fuck it. And that is how you know this dude does not live off trading. He's definitely hasn't been doing it for 5 years. If he has, I don't know what the hell he's been doing. This guy doesn't know what he's talking about, man. Complete, utter nonsense. He doesn't understand the difference between risk and position size. I mean, that's the most basic fucking thing you can do as a trader, right? You gotta know do you even understand what is happening when you're clicking these buttons? Do you not comprehend what is going on? You can't just... I am lost for words sometimes. People just make up absolute shit. Just to try, and they can't accept that they're wrong, right? They can't accept that they're wrong. You know, what this guy could have done is say, oh, actually, yeah, true. He wasn't actually risking 1 billion. Yeah, all right, I was wrong. Sorry, guys. Huge respect. If he did that, massive respect to him. Because he said, look, I made an assumption. I got it wrong. I hold my hands up. Thank you for educating me. Huge respect. When people do that, very rarely, I have massive respect for those people. Because, you know, I mean, this is just nonsense, right? But, here, finally, the first person, Billy CXO, finally comes out. The position is worth 1 billion. That's likely with leverage. All right, he's kind of got, it's fine. They aren't risking 1 billion loss to make 18 million. Finally, the first person in the comment section to actually get it, to actually understand the difference between a position size. Whew. Anyway. Let's move on to the next comment. Again, another person, not that many likes. Who else thinks risk to reward ratio is nonsensical here, but a win is a win? You don't know what his risk was. That's the reality. The clip doesn't show you what his risk was. His position size, again, $1 billion, but we don't know where he was willing to get out. He might have been willing to only risk 50 pips, right? Then his risk reward, if he got 180 pips out of it, pretty damn decent, right? We don't know what his risk is. So we can't even assume, you know, his risk-reward ratio is nonsensical. We don't know what it is. But he certainly wasn't risking $1 billion. If you enter a standard lot, when are you ever risking £100,000? That's insane. You're not. So again, people who don't understand the difference between position size and, you know, actual risk. Another person, he was full porting. Yeah, he probably was, actually. That is true. He probably was full porting. Hence why, you know, his I believe maybe his risk manager on the floor, I don't know who the other actor was meant to be because I haven't watched the show, but, you know, was saying, no, close down his terminal, get him away, make him stop trading. And he was eager. So he probably was full porting. Or definitely trading way higher than he should have been. Well, I say should have been, but what he was meant to be trading. So he was being, you can say he was being risky, absolutely. Clearly by the reaction of his colleagues, he was definitely being risky. And yeah, so that was that clip. But let's move on to another one.
You know, again, in all the trading books, you know, they're identifying support or resistance levels. You know, the books say don't buy at support, wait till prices, because you don't know if there's any buyers there. Let prices turn, wait for confirmation, wait for a reversal, and then buy. Again, we look at that. We look at that. You know, we don't like confirmation. We don't want confirmation. When price is down into a level where we determine banks, institutions are buying, we want to buy it right there. If we wait for confirmation or a reversal or any lagging indicator or oscillator, all we're doing is increasing risk and decreasing reward. You know, Goldman Sachs doesn't say, you know, wait, don't buy yet. Wait for prices to rally a little bit and then buy. You know, they don't do that.
Just a different mindset, I guess, that you got to have.
It's a different people that they want that confirmation. They're willing to increase the risk and decrease the reward for that confirmation, which doesn't give any more guarantee that prices are going to continue in that direction anyway, even waiting for that. In fact, there's less likelihood that they're going to continue.
Yeah, I mean, what a great reel. This guy is talking absolute truth here. And you'll see that in my trades as well, on how I trade. I don't always wait for the move to happen. I very much anticipate when the move is going to happen, right? I jump in. A lot of the time people call it front running or whatever, but it's obviously I wait for some kind of confirmation. But because we use order flow, we don't use candlestick patterns or any of this outdated stuff. We're using the real institutional grade tools, right? We can see when that shift in supply and demand starts happening, and that's when we strike. And we're not always right, of course. You know, I mean, you're going to get it wrong many times. That's fine, but you can have such a tight stop then, because you know once if it goes higher up or it goes lower down, you're wrong. Like, you can get out the market like that. And you can jump back in. Sometimes you'll see, that happen, but then I'll jump back in once the move happens, and boom, catch it, and it's beautiful. So 100% what this guy is saying is I agree with that. But let's look at the comments. Let's see if anyone doesn't agree, and reason being, since I don't have the institution's money to move the markets, I'll wait for confirmation they're buying or selling. I don't need the whole move. All right, so this whole idea that institutions move the markets and they manipulate your stop loss and all this kind of, it's all bullshit, guys. Come on. Just no one gives a shit about your retail stop loss. This is the reality. You're such a tiny fish in a giant ocean. No one cares. What you're looking at as, stop hunts and all this kind of thing, that's just literally the market dynamics of how it works when a large order needs to be placed and it has to find liquidity. And you just happen to be part of that liquidity because you're putting your stops at areas where a lot of other people might put their stops, and there will be a bit of liquidity. But it's got nothing to do with people targeting you. And institutions, okay, look, can they move the market? Yes, some of the really big, central banks and stuff, yes, they can theoretically move the market, but then they try their best to not move the market. Because the reality is, when it comes to trading, it's a zero-sum game, right? If you make your position known and you make it too obvious and people pick up, hey, there's a big fish in the waters right now putting on a lot of risk essentially on the table, people are going to bet against you. And that's the reality. People are going to try and take that liquidity and bet against you, okay? So institutions as a whole, they try to hide their orders. So they break it up into smaller little bits. They do icebergs. They do all sorts of different tactics to try and just kind of, the scene in Shawshank Redemption where they finally reveal that he's been, pickaxing with his tiny little rock hammer or whatever it's called, doing a tunnel, and they show the scene where, he's out in the yard and he's just releasing a bit of dirt into the yard, bit by bit, day by day, over years. That's what institutions do with their orders. They don't just, smash out one giant rock and then dump it in the yard. No, it's just, their orders are small, broken up, and they kind of scatter it along with others. They kind of hide their orders. They don't just make these huge, obvious things in the order book where everyone can see, oh, look, 1,000 contracts has just been executed by one individual. Everyone is going to be freaking out. Everyone's going to be like, what the hell are these people doing, right? So, and it will create volatility, it will create panic, it will create all sorts of different things that they don't want as well. They just want to drip feed their orders into the market and out, and that is essentially all they're doing. So they don't move the markets in that respect, right? Everyone collectively still moves the market. Institutions get it wrong as well. You got to understand that. Only because they're a big hedge fund or a big institution doesn't mean they know exactly what's going to happen and can just move the market in any direction and can just play ping pong by placing orders. That's not true, right? They get it wrong all the time, all right? They're no different to retail traders in that respect. They get it wrong all the time, okay? One person says they are the confirmation. To a certain degree, yeah, I would agree with that. If you can spot a large institution entering, I wouldn't immediately jump on their position. I spot it all the time. You can see it in order flow if you know what you're looking out for. But I wouldn't just jump headfirst into their position, right, and copy their trades. Reason being is you don't know if are they entering actually a fresh position, or is that an exit? Are they actually getting out of an older position? You got to figure out the story behind the market, right? That's why reading the order flow is not just what's happening in that second, but the overall kind of picture. You got to look, if we're in an uptrend and there was loads of buyers that came in and the market's moving up and it moved up quite well, and all of a sudden you see a bunch of sell orders appear that are huge, that's probably not new people selling. That's a lot of those buyers getting the hell out of their position and taking profit, right? So you're going to kind of figure out the market dynamics, but you're somewhat right that they can, you know, by tracking institutions in on the charts, you can kind of get better confirmation on a trade. Another person, they confirm by themselves, but they don't. The market, again, this is grade A retail bullshit. Institutions do not have the ability to just kind of do whatever the hell they want and play ping pong with the market. That's not how it works. They're wrong a lot of the time. If you actually saw how wrong institutions are, you'd be quite surprised. They lose money quite often. Don't get it twisted. Don't think that they have some magic, you know, ball there that can tell them everything and where the market's going to go. And if it doesn't go their direction, they just make the market go in that direction. That's not how it works. I'm sorry, but that just isn't the reality, right? Be the easiest game in the world if that's how it works. You just need enough money, you can just play everyone. That's just not how it works, all right? They aren't the confirmation. They don't make the moves. This is still, generally speaking, bullshit, okay? Lol. Institutional trading and retail trading both differ on things like structure and tools. As a retail trader, your set of tools are significantly limited compared to an entire institution. At the retail level, always confirm your edge. Going in without confirmation is like driving in a foggy night without headlights. Now, this guy's got a point, but I still disagree with him. And the reason is, they don't have that different tools than what you can actually have today, right? The reality is, there are many retail tools, okay, institutional tools that are now available to the retail trader. Now, do they have high-frequency trading algorithms? Yes, but that's a whole different style of trading. That doesn't even affect retail. Well, it does affect retail traders because it affects the market, but that's not even your competition, right? If you're talking about like HFT and stuff like that, these are algorithms that are more than just algorithms. These are data centers as close as possible to the exchanges to try and front run and jump ahead of other people's trades so they can, you know, buy it and sell it back to them in a fraction of a second and make a bit of money. But that's a whole different game. Like, we're not even talking about that, right? Okay, that's a whole different, that's not even what this guy is on about, right? When you're talking about normal day trading, what institutions have, yes, they have their own proprietary software. Yes, they have, you know, tools that are probably better than the average retail trader. That is true, right? But the reality is, you can have the order flow tools today, and you can trade footprint charts. You can see the level 2 data. You can see the depth of market. You can see the tape. You can see the volume. You can see all that, and that is ultimately the only information that those institutions also have, right? There is no other additional information out there from the exchanges that you could possibly figure out. Now, maybe they build some algorithms that help or whatever for their traders, do a bunch of calculations based on that data. Sure, maybe they do, right? Maybe they have a very nice user-friendly software that makes it easier for them to spot certain things. Sure, whatever, right? But as a whole, you have pretty much the same tools at your disposal. You're just choosing not to use them because you're living in this kind of daydream world where institutions have crazy AI tech that, you know, that when they can see your stop loss and they can, you know, move the market and they are the be all and end all and they can do everything, and it's all bullshit, guys, right? Institutions, yes, they have probably a bit more of an edge than the average retail trader, right? Because not only do they have, you know, the money behind them, they have, you know, a team of people who are very smart, who've been doing this for a long time. They have risk managers at play all the time to ensure that traders aren't doing anything, you know, out the books. They have like a good structure, you know, to keep traders in check. Because most retail traders lose because they just start over trading. They get emotional. They can't, you know, they marry a trade. They do all stupid stuff, right? Can't do that on an institutional level. You start doing that, there's a risk manager there saying, hey, get out, pack up your stuff, come back tomorrow, right? So they don't allow you to kind of get into that kind of spiral down. So, you know, but again, this guy believes that they have stuff that we don't have. The reality is, you know, if you weren't on an institutional desk, you'll realize that, okay, most of the stuff you can actually have access to today, and it's relatively affordable as well. You just choose not to use it for whatever reason. because you don't realize it even exists. All right, we're going to wrap it up there. Went through a bunch of comments, sort of Dunning-Kruger effect in action. Now, the important thing is, look, guys, if you're really interested about learning how to actually trade, check out my channel. I actually do show you the real way of trading, right? No squiggly lines here. None of this, I don't know, outdated, absolute nonsense that you see on YouTube for the most part. This is real order flow trading. Get the real data. I don't know why people choose to trade. Like when you look at like smart money concepts and all that, I don't know why people choose to guess where institutions are entering, where the volume is. Oh, this is an order block. This is a demand zone. This is a supply zone. This is, where all the big buyers are coming in. Why are you guessing when you could literally see that data? It blows my mind. Do you know what I mean? Like, you're making assumptions based on the most random things, like a doji candle or something, right? And you're not. I don't know. I mean, my brain hurts when I hear this stuff, because you could literally have the data. You could literally see the buy orders, all the buy contracts, all the sell contracts in front of you. Why are you guessing? I don't know. It's insane. But yeah, that's pretty much it. Make sure you hit that subscribe button, turn on channel notifications, do all that good stuff, leave a thumbs up, etc. I'll be back with more videos. Let me know if you want to see more videos like this, where I react to different trading reels and whatnot, and have a little, I don't know, have a little laugh at their expense. I don't know. But yeah, awesome stuff. I'll catch you guys very soon. Thank you for watching, and take care for now. Bye-bye.